Hello and welcome to May 19th, Alphas IAU at 39%. Let's go look at the chart. There it is, 39% for IAU. That is it's a mining stock. Oh, it is the ETF for mining stocks by BlackRock. That's an iShare right there. It's an iShare by BlackRock. It's an ETF. And this was an open field scanner. We did this. It's a scanner. Because remember, I'm using a lost leaders list. My lost leaders here at the Alphas is restricted to about 45 issues. That's it. If none of the 45 or I think it's 45, 45, 46 do not meet any of the entry criteria of the particular strategies in play now, we don't have a play. We're stuck on the sidelines because our team is committed to one league, and that is the strategy that we're playing. We're not playing an open field strategy. The converse also too is because we are a lost leader, we're limited to the 46 teams or the 46 opportunities. Whereas if we do a scanner, which we're going to do, and toward the end, you'll see that is a larger field in open market. So we did this in class, and this was in March. So this stochastics here in March was the stochastics 10-day EMA stochastic. That was the scanner that got it in this trade. That's what this is. And at that time, look at this. It was a sell down, down. It was a sell up, up with a buy with an implied volatility of a 5, which I declared even at that time. I was nervous about this trade because of that implied volatility of 5. Well, look, come down the road. We didn't get stopped out, and we're sitting on a small profit. Not a big profit, but the bottom line was, again, this didn't owe us anything because this was an open field scan. So what we did for a price target, we wanted 2% of capital. So our target was 122. Now if we get to 122, fantastic. We made 2% on our trade. Now not a lot of money because this was activated on the 15th of March, and we're at May 19th. That's 2 months. We essentially made 1% gain on the position. Even under Warren Buffett's rules of engagement, we did not do good. But again, this is just a scanner test from class, and the bottom line is to prove that the scanner in the open field can produce winners, and that the winners return back some kind of profit along with its trading power to build up the trading power here, known as BP, buying power. That's what BP stands for right here. Options buying power, right there. Okay, that said, we're now going to see if we have a dipper low here. And a dipper low is we do. Come here, move the data box, watch this. This low is 1774. I need it to be 1 penny less. I need 1773 on the next low, which was today. There it is, and the low today was 1773. Yes, by 1 penny, we made a dipper low. But is it an official dipper low? It is not. It will be an official dipper low if we can get 1774 or higher low on the right tomorrow. Tomorrow, May 20th, we're looking for that to close for the low to be higher than 1773. If it's 1773, it's a flat bottom. And you still got to wait for 1774 on the right, or it gets disqualified as a dipper low if we get a low lower than 1773. If we get a lower 17, we get a 1772 or lower, then this dipper low is disqualified, and we will have to wait again for a dipper low to reform. So tomorrow is going to be a very interesting day. We have 3 ways to go: up, middle, down. Up would be 1774. Even if it matches this low to that low, it doesn't matter. This is the low point, and that becomes the new dipper low stop. If we match 1773, then it will be a flat bottom. There'll be no action taken. Waiting now for Friday's low. And where will that be? And if it goes to 1772, then this dipper low is disqualified, and the 1772 now becomes a new dipper low, or potential dipper low. Not complete, not qualified. It's potential. Until we get that higher low on the right, it is called a potential. Once we get the higher low on the right, it becomes official. And when it becomes official, then this lower low will then move here. So that will be our hope, that we're going to get that higher low on the right tomorrow. And indications are the RSI is going up. The stochastics is sort of flatlining here at the 90 value line, but we still have a rising value on the MACD, but we have a dropping on the histogram. So we've got what we call mixed signals, and that is reflective right there. Doji. That's what you're seeing there. You're seeing a doji. The price is opened here, and it opened at 1782 and closed at 1782. And we got the high and got pushed back, got pushed down the bottom. So they're right there. Nobody can decide which way, and that tomorrow the buyers and the sellers will battle out again and then decide which way they're going to go. So that is a very good analysis of the IAU with the dipper low and applying the less than 60-day rule right here. Okay, that said, that then takes us to what is Walgreen doing, because Walgreen is in negative territory. Walgreen is also in that situation of dipper low, because Walgreen is in the less than 60 days also. Remember, this thing here, this if you go back just a couple of weeks, this was populated with 11 positions, and a lot were in calls, and the account was up, and even just last week the account had a high of 7,300. So we had 7,300, so we had a pullback of almost $600-700. It happens, but the bottom line is we're still in a profit zone here. So here is Walgreen, and now we have this dip. Now look at this. This is a beautiful baby hammer. It's a doji, but I call it a baby hammer because of the fact this just didn't have a big body. That's all. What would make this the difference? This would be, if this had a bigger body, it would be called a hammer. And if it had the hammer and the tails to the bottom side of the hammer, then that means an indication for uptrend. So again, we're going to be looking at this. Our dipper low is way down here at 52.40, and we got to see about it going up again. We still got plenty of running room on time. Time is not a problem here. Action is the problem here. Okay, so that takes us now to our exit, and our exit today was T minus, and T minus got stopped out. And it got stopped out for a loss. I was anticipating it. Remember, I was anticipating a loss. And where are you? There it is. So we were anticipating a loss on T minus. I gotta get better with this. Okay, so here's our dipper low down here, and we got stopped out. And we got stopped out with a gap right there. We got stopped out with a gap. So we got stopped out right here at the open. So here goes the numbers. It was 110, not 81. Let me check that out. It was 110 loss, $110 loss with $2 in fee, with a loss now of 114. So now that we have 114, and 114 added to the ode. The ode was 40.22. So let me go ahead and bring up the calculator and do that. 24.20 plus the 114 lost today. We now have a new low of 25.34. 25.34. There we go. And now that just becomes a new O, and we will work on it. All right. With that said, we now have we're still at 66.69. 66.69 minus 55.53, our benchmark, divided by the 55.53 benchmark percentage. We are 20.5, and the SPY today was at 11.4, and I did the numbers earlier to prove that it is 11.4. So with that said, we are concluding today's report of losers become winners. IAU at 39%. Stochastic still running the ahead of SPY of 20.5 to 11.4. And with that, thank you very much for stopping by and checking it out.